Hey there, everybody. Thomas Wood with ValueCharts.com. It is Monday, November 10th. We're going to take a look at one of the trades we had in the futures trading room earlier today, and this one actually worked out really well. It is a short in crude oil. Now, first thing we said when we came in this morning was on a 30-minute chart, we had a bear flag and suggesting that it continued to go lower. We also ended up breaking a couple trend lines today in crude and moving down through those as well. But we shorted crude right off the bat, and a couple of different things we looked at. First, we had an original short was right over here, okay? After that, we had lower highs, lower lows. We said the overall major trend in crude is down. We had a minor uptrend within the context of a downtrend when we came here and we put in a higher high and a higher low. Now, after that, we put in a lower high right here on the 250 tick and then a lower low. Once that happened, we were resuming the downtrend. So you were selling on the break of the lower low with your stop just above the high. So you were shorting right at about 32 with your stop up about 50. Okay, so you're talking about $180 a contract. This ended up putting another lower low, lower high, lower low, lower high, and broke down. Now, the second entry you had was potentially on the break of the 79.16 support for the major break of support and a continuation to the downside. Traders took, I know there's a lot of people in trading room who were making money in crude today. We had people entering both on this minor support break here and the major support break here. Now, crude oil continued to sell off, and if you look at a 1,000 tick chart, crude stayed in a downtrend the entire day. So we had a high or lower high, and then a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and now we're potentially putting in another lower high and continuing with the downtrend. So I know a lot of people are holding on to this for swing trades. A lot of people made a lot of money because we came all the way down from the original entry up around 79.30. Right now we're at 77.60, so you're talking about $1,700 a contract or so worth of a move to the downside off of $150 to $200 a contract worth of risk. So about a 10-to-1 reward risk ratio. Not bad at all if you ask me. But that's all we had for today, so great trade. We had a couple other trade opportunities shorting gold, even though we have a longer-term bullish outlook in gold, and buying and selling the indices as well intraday, all of which worked out really well. Plus, we had a couple of crop report trades that worked out decently. So that's all I have for you for today. Hope it helps. Don't forget to pay attention to what your intraday trend is telling you, because the highs and the lows are going to tell you where the market's going. And again, that's it for me for today. Hope it helps, and until next time, happy trading.